Yeah, well, we always have to manage these things. And, you know, my predecessor used to talk about constant shock syndrome and the airline being really good at managing different things at different times. You know, on the positive side, I don't think there's anything going to derail the domestic recovery and even an international recovery. We're expecting to be back, as you said, by the middle of the year to 100% of pre-COVID domestic schedules. I think this is robust this time. We're seeing huge demand coming in, particularly leisure. We're seeing the corporate and the SME market coming back. And then internationally, when borders are open, or borders open, not all the rest of the world is. Japan's closed, New Zealand's closed, essentially. But when they open, like the US and the UK, we see a boom. And India, we see the boom. So we're very confident that's the case. Now, with Ukraine overlaid on it, there's a few moving parts. One, we don't know how long it's going to last or how big it could be or whether it's going to be a fizzle. You know, the market, I think, is uncertain about how this is going to play out. The big consequence for us is fuel price. Fuel price could go over $100. It's getting close to that. That has a big impact on airlines in particular. It's a big input cost. We're very well hedged. We're probably one of the few airlines in the world that had the cash, had the strength to hedge out. And we've nearly completely hedged till June, and then the hedging starts declining as it would normally do in a normal year. So that gives us time to cope with higher fuel price, to manage capacity and airfares if we have to cope with it.
Because I was going to pick that up on fuel price if I can, because pre-COVID 2019, your fuel costs rocketed $600 million that year to $4 billion. Now, in this half year, your fuel cost was only $500 million. So that's down about $1.5 billion on what it normally would be like. And as you say, as those hedges come off, if the fuel prices remain elevated, there's almost a financial impact that comes from those fuel prices.
It is true, but you get the other side that helps you with that. One, the pent-up demand that's clearly there, which gives you demand, and everything's supply and demand. If the demand's there, you can actually recover the input costs that come in. We also get the effect, maybe internationally, that people in Europe, people from the United States and Asia won't go to Europe because that happens in time of uncertainty, and Australia in those times can be seen as a safe haven. So there could be a demand benefit depending on how long that lasts. And we also are in a position where very clearly we've done a lot of restructuring to where we were pre-COVID. We've taken $1 billion of costs out, so we can survive with higher fuel costs, and we can digest the load of that given what's happened. I don't think we'll have to, because I think there's going to be discipline from every other airline. Every other airline is going to be more exposed to fuel. Every other airline is in a worse position coming out of this, and I think they're going to be cautious that they don't overstretch themselves, which means there is that stability in the market coming out of this.
Okay, but that also means that there's probably likely to be higher seat prices. This is inflation coming into the business, the airline business around the world as a result of those higher fuel prices.
Yes, so to cover the inputs of higher fuel, typically airlines have to try and pass them on. But at the same time, you've got this competing dynamic that we have stood up all 22,000 people. We have all of our aircraft we're paying for anyway. The depreciation is there anyway. And we'd rather make $1 in the air than on the ground. So if you regard a lot of that as sunk costs, your airfares could still be very low. It just has to cover those increased fuel costs. And other costs of the variable costs when you're operating. So I think you're still going to see, at least for the next 6 months, maybe for the rest of the year, you're still going to see low airfares like the $22 Jetstar airfares that were launched yesterday.
Okay, during the presentations today, you did say that there was a point at which your chairman has mentioned this, effectively that the airline could not take for granted it was going to survive the downturn and the pandemic. Just take me to that moment where the board and yourself looked at this and wondered whether Qantas would survive.
So it goes back to how fast things happened in 2020, as you remember, Roz. We had, all the way through March, the borders progressively closed. And when you look at what we announced, 1 week we were saying 5% drop in domestic, 20% drop in international. Next week it doubled. The next week it really went down to nearly no international service and very low domestic. And when we looked at, it's like a moving cruising ship. Then you're looking at how do I move this to cope with it? And there was that iceberg out there. Because we had payroll.
Which that iceberg being the collapse of Qantas.
Yeah, so I think we in federal court actually said we had 11 weeks of survival back then with all of our commitments of payroll, our commitments to other costs that were there. So we immediately had to go into a focus of a restructuring of the business, a reduction of our cash outlays, and then we had to make unbelievably tough decisions to get through it. 22,000 people were stood down. That saved us on the payroll. We talked to the government about JobKeeper. It wasn't in existence at the time. We said, I think you're going to need something like this to get people through. They helped our people. We got our people jobs in Woolworths and 200 other businesses because we just couldn't pay them. And we used the provisions of the Fair Work Act to action a stand down. And we did the same thing with a lot of our suppliers. We said we wanted to renegotiate terms. We had some people, we said we have a force majeure clause, we're not going to pay you because we can't operate. And so we did all of that to give us bigger bandwidth. And then we went to the market simultaneously and raised debt. We, lucky enough, had bought 100 aircraft with cash. We were that strong, making record profits beforehand. We then mortgaged them, got that cash in to give us a bigger runway. And we went to our shareholders, and the shareholders thought, with our restructuring plan, our shareholders thought this is going to be a great business, and we were able to raise nearly $1.5 billion from them. So given all of that, the 11 weeks became years because we did all of the tasks we needed to do to give us time to get through COVID.
Alan Joyce, always great to chat to you, and many thanks for your time today.
It's always good talking to you, Ross. Thanks for your time.